Yeah, good morning. I'll be talking, like Marco said, about my new startup, which is a pretty exciting thing. And I was here, I think, the first time 6 years ago, which was a company called Creditech. And I'll get to the story, what the combination between all this is and what we're doing now. So, yeah. My personal background in a nutshell is pretty standard business background, then joined Rocket Internet, learned how to execute and basically replicate successful business models at great speed. After that, we founded a company, which Marco already mentioned, called Creditech. And basically, the idea behind Creditech was to go for an unserved credit segment by automating the way a credit decision is done and pulling in data resources, data points that haven't been used for credit decisions before. So in a way, the attempt was to build a new credit bureau for a segment that people haven't received capital in, and so nobody really knew who to give money to. And this is kind of the problem that we're also trying to solve with Finiata, because the way people look at credit is you want to avoid risk. So you give money to people that actually don't need the money, which is a very kind of funny concept from a demand perspective, right? Because those people who need the money most are usually the highest risk ones, and that means people are very hesitant to actually provide these people with capital. And that applies for consumer credit markets, but it more so applies for SMEs and freelancers, and this is the problem that we're trying to solve. So pretty much any country that you look at in Europe has a lot of freelancers and small businesses that are simply not in the scope of banks or financial institutions because they are either too small or too unprofitable, or they're simply too thin credit files on these customers. And this is what we are doing with Finiata. So our target segment, I mean, when you think about credit or factoring, the product is usually the same. So you're always providing money in one way or another. But there's a very big difference if you are in the segment which you see on the right side, which is providing large amounts of capital at low risk, low margins, and quite frankly, the market is working quite efficiently because there's good credit bureaus, and you can, there's not too much friction. If you're a large company, you want to go for a bond or a credit line or factoring, there's not too much of a pain point. This looks very different if you're on the left side, which is the small businesses, the freelancers. I'm not sure if you've ever tried to go to a bank as a freelancer, and even if you ask for a credit card or like very small credit, people would be very hesitant to provide this to you. And this is the segment that we have found as the most interesting one, because this is something, this is an area that you can make a big difference in with technology, rather than kind of doing what people have done in banks and providing and adding a web page or some online marketing or something like this. It's really about untapping a segment that people haven't been able to get credit in. And so the market is not something that we're taking from offline to online. It's a market that hasn't been served in the past, and I'll get to the reasons why this is the case and how we're going to try to change this. Our product is a web page. You can apply online in Poland and since last night also in Germany. We ask for a couple of data points, and then you get an instant credit line for your business. And it works in the way that you upload invoices, and we pre-finance your invoices in the scope of the credit limit. So it's kind of a real-time credit, if you will. For now, it is required to be based on an invoice. And this is what I was talking about already. It's really about small amounts, and then also, I'll get to that shortly, about very short duration. So our average loan is 1,800 euros, has a duration of 40 days, and an average yield of 4% per month. We financed over 7,000 people in the last couple of months, and we're seeing that this is really a market where, quite frankly, you don't have to market too hard, because it's a segment that people, that nobody is competing for your customers with you in the online marketing channel. So it's something very different to providing large amounts of credit, which is more like funding circle and other type of credit segments and company sizes. Yeah, this is the amount that we issued over the last month. So the company has been live with a non-prototype product for 4 months, and we managed to issue 6 million in mainly Poland, and Germany, like I said, is live since last night. We're on a 1,200,000 euro revenue run rate. which is, I'll just leave it uncommented here. 20 million is our issuing run rate, and as you saw on the previous slide, our average duration is between 30 and 40 days, and that means we can turn around the capital very, very quickly, and that also means we can learn very quickly on the data points that we're gathering. 60% is our monthly average growth currently on issuing, which is quite impressive, and that means we can learn at a very fast rate. So now I'll get a little bit to the reasoning. Why is this market untapped, and why hasn't anybody entered this before from a startup or a banking angle? And the first reason is that this is a segment that you cannot make money with the traditional way of how credit decisions are done. So if you have a human looking at a paper in order to make a credit decision, you're not going to make money in issuing a 1,800 euro credit, because even at 0 defaults and 0 marketing, the cost for even doing that decision is higher than the potential profit from this, from underwriting this credit. So the only way you can untap the segment if you go for full automation, which means end-to-end credit decisions, servicing, repayments, etc., an automated machine that doesn't require any human input or any kind of paper that is sent to the customer back and forth. The second one is that because nobody has given these customers any credit, there's no data points in whether or not somebody is a good credit borrower, simply because nobody has tried. And that means there's no data points, and that leads to the problem and the reason why this is an untapped market segment, that we have to build up our own credit bureau. And the way we do this, I'll get to in a second. You have to build your own proprietary risk model, and that means you need a combination of very short-term credit. I mean, if you have an average duration of 3 years, it means after 3 years you have a data point in who's a good customer and who isn't. In our model, it means that we can learn very quickly through machine learning, and basically it's quite simple. We give money to people without knowing if they're going to repay, and either we get a repayment or we get a data point in who we shouldn't give money to the next time. And that works if you can learn quickly, if you have relatively good margins, and if you have enough data to learn efficiently on the risk model. The second one is we are going to expand this product further and further. So we don't see our vision as an invoice financing provider for Europe, but we see ourselves as an SME ecosystem that will evolve towards other kinds of products, including, but not limited to, lending, credit cards, bank accounts. So we really want to be the player for this small segment and build a very horizontal product. And we're starting, not through a free bank account or an invoicing platform, but we're starting to build the highest value for this segment, which is a risk understanding for which customer is a good customer, what pricing, etc., a customer should be given. And then the third one is to expand this product into more and more countries across Europe, and we have a partner bank that allows us to passport this throughout Europe, which means we're very flexible in terms of geo expansion. The team is a combination of people that have worked at credit tech before, and then also people that we hired from other fintech companies. We don't have too many bankers in our team. First of all, because we don't need any regulatory gray hair, because we work with a partner bank. And second, we believe that we want to employ people that want to change something, and not people that kind of bring the DNA of how problems have been solved in the past in a segment that is not interesting for us. We raised a total of 10 million in equity over the course of the last 12 months from people that we knew from credit tech already, and other investors that are very kind of knowledgeable in the space and have been doing a great job in supporting our vision. We have a 30 million credit line in place, which means we can refinance our loan book through equity in a leveraged way. And this allows us to, like I said, we are live in Poland. We launched Germany last night, and we're looking to expand very rapidly over the course of the next 12 months. What are we looking for? We're looking for employees, partnerships, debt funding, and also we're currently raising a Series A. It's in the later stage, but if you're interested, you can still reach out to me, Sebastian at Finiata.com. And I think that's it. Thank you.
So much, Sebastian.
Thanks.